There can be various ways in which shares can be issued. There can be bonus shares, there can be sweat equity shares, there can be ESOP, employee stock option plan. Let us understand each one of them. So bonus shares are issued when you have existing shareholders and companies having big surplus reserves, and therefore company issues some bonuses shares to these existing shareholders. That's a bonus share. In case an employee has worked very hard and contributed to the growth of the company can always issue a sweat equity share as a gift to the employee. Then third is ESOP, ESOP, employee stock option plan. Now this ESOP is used to retain employees. If an employee is highly valuable to the company and company do not want it to look for another job, then company issued ESOP, which gives a sense of ownership to the employee that they own the company, and this helps companies retain the employees.